Hey traders, happy Sunday. This is Ron Haight. Hope you're having a fantastic weekend. As always, everything in this presentation is for educational purposes only. Let's kick off here. We're going to use Thinkorswim. This is a daily chart. This is the S&P 500 ETF, the spiders. If we go ahead and zoom in, we have broke the 50-day on Friday. This is what I've been telling you guys to watch for. This is what the bears have been waiting for. It's happened. Bulls have lost their edge. Bears now have the edge going into this week. There's no what ifs. They broke it. Volume picked up. Bears walking into this week. If I zoom out, once we got above the 50-day over here on 424, we've been above it. Every time we got near it, there was a test and a bounce, even a bounce on Thursday. But notice the gap down. Interesting, right? So look at these highs, lower highs. We could not rally, and then Friday we get the fracture. Look at the volume. Red beats green. Red are down days, green are up days. Even when we have above average green volume, right? Those bars are pretty tall. There was no major significant bounce. They could not set a higher high to say, okay, this was some profit taking. The bulls are, letting the market come in a little bit. They're going to buy the dips and start sending it higher. That did not happen. There was no follow through. They could not even get above the previous day's highs over here. This is a flag pull. This is a flag. This is a breakdown. So again, bears have the technical edge walking into this week. We take a look at the Qs. Same thing. Once they got above the 50-day, back on 414, they were leading the charge. We've stayed above that orange line. We never really even got close to it until the 4th and then the 8th. That would have been a Friday and a Tuesday. And then we got below it on the 11th, which would have been last Friday. Look at the bounce. We could not get above the red line, resistance. Now the red line is the 20-day EMA. Resistance, 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 gap. We tried to get above the 50-day Thursday, and then we sold back off. And then what happened? We actually had bearish engulfing on Friday on above average volume. Yes, there was some buying coming in because we're off the lows. That's still bearish engulfing. They still gapped higher and then closed lower. The bulls could not get anything going. They are not buying the dips. They're now selling the rips. This is exactly, precisely what a sentiment change looks like. Does that mean the market's going to fall out of bed and we're going to have a huge crash? No, we don't know how low the market can go. Maybe we get a couple days sell-off. Maybe we just go sideways. The way this looks, down is the trend. And we'll just have to wait and see how it plays out. But if you were a bull at this point on the short term, this is what you do not want to see. This is exactly what the bears want to see. Big sell-off, attempt at a rally. You keep setting lower highs, and now you're breaking down. Support on the Qs. There's a little bit down around 257 or so, maybe, what is that, $9 on the QQQs. If I go to the S&P, we didn't look at that. Where would the support on the S&P be? I would actually come down to near 300, which would be 30 or 10% lower. That would be shocking. Now, September is also a seasonally bearish month. It is one of the few months of the whole year where we have a couple weeks where the market actually has a negative track record. It's not by a big number, but there is a slight down move. And then keep in mind, so goes the market, or so goes Apple, so goes the market. Apple, bearish engulfed on the 2nd day of September. If you guys go back and watch my weekend updates, I told you guys that there is 1 month. It's a couple weeks of the entire year where Apple actually has a seasonal bearish bias. And I said to you in those videos, if Apple trends down, the market's probably going to go with it. It's such a bellwether. It's owned by so many companies, so many big funds. Well, look what happens. There is September 1st, right? We get the gap up. Happy days are here again, post 4-for-1 stock split, and then instant bearish engulfing. You could say, well, am I really that good? Could I really forecast that? The answer is, it wasn't a guess. We're using the stock's own track record, aka called seasonality, as our weapon, as our secret weapon. We knew that Apple had a bias. Could you imagine buying a put here and then all of a sudden saying, wow, now the stock's all the way down here? Wouldn't that be an incredible win? The stock is down, even if you watched at the end of the day. And what do we close at there? 131.40. Now you're at 106. $25, and you literally knew it was about to happen. And down we go. Same thing with Apple. Here was a big rally, but look at the next attempt. Lower high. Here's another attempt. Lower high. And now we're breaking. So Apple's breaking down. The target's going to be a gap fill down there to 96 bucks. And just to show you really quick the power of seasonality, knowing when stocks are about to turn, you get that bearish engulfing. Could you imagine sitting home at your computer knowing that September's a bad month. You're 2 days in and you were put on notice. I told you guys about it back in August. I said, get ready, watch for the turn, right? Look at this. 9-2, if I use the Analyze tab in Thinkorswim, on 9-2, we go back to October, we're going to grab a 45-day put. It's really just a couple-week trade. Right at the money is 131 and a quarter. So right where the stock was trading, it costs 10 bucks. Nice, easy number to remember. Watch what the value is today. 24.75. 1,000 bucks turns into 2,400. Not bad. And it wasn't guessing. How? Because Apple typically goes down when September comes. Bingo. So if those of you guys that are following along on paper, you're probably just shaking your head saying, oh my God, this is incredible. And it truly is. That's the power of seasonality and knowing when these things turn. So Apple's going down, Q's going down, Spider's going down. You roll all that up, it's bearish this week. Now, the bulls, you might say, well, let's hold on to the Dow, right? The Dow is above the 50-day. You didn't break down yet. But the Dow has not set new highs. This thing has been lagging, so you really can't go by the Dow. SPY, Q's, Apple, way more powerful than just the Dow as a leading indicator, if you will. And then you look at the IWM for you small cap traders. You never went up and set new highs either. This thing's been weaker, so maybe we're not selling it just yet. The Dow and the Russell, with them not breaking the 50-day yet, is not enough to outweigh the power of Spiders, Qs, and Apple. I usually talk about, hey, if there's a divergence, wait for all four to confirm. Not in this case. You got the big three already going down. The Dow and Russell, they were not going to be able to fight this trend. They will eventually fall in line if the selling keeps going. But we're on a full-blown sell this week. Now, remember when I told you about seasonality stocks as we got into September? I told you watch these two. Watch Delta, even as the market's coming down, and then watch AMD. So just really quickly, just to keep banging the hammer on this seasonality stuff, I've been talking about this with you guys for now years. I said when September comes around, Delta typically rises. And then folks said, what about the coronavirus? Hey, let's just see, right? Here is the S&P. There is September 2nd, 2 days into September, and there's the 3rd. Down we go. And what did Delta do? Here is September 1st, 2nd, 3rd. Delta was around 31, goes up to 35, not bad, 3-4 bucks, and you're still at 32. But look at the direction. Delta's going up, an airline of all things. It's in the window when the big funds typically buy. And now we're even talking about COVID stuff. And I also said, watch a stock that actually rolls over once September comes. It's AMD. What did AMD do? The second day in September, bearish engulfing, and then down she goes. That stock was at 90 and now it's 75. If you want to get crazy, let's just do this. Just to show you how we can just look ahead. Let's say we do, let's not use 44 days. Let's use maybe November. The stock was at 90. A long put cost $12.55, strike 90. What's it worth today? We'll do this together live. Strike 90 today is worth what? $15.50? Here it was worth 12. Oh, that's October. Whoa, hold on. November, there we go. I was going to say, that doesn't seem right. There it is. 1765 versus 12. Better than a sharp stick in the eye, as Kramer would say, as I would say. It's a great saying. All right, now let's go to Amazon. Review 3 of these really quick. Here is Amazon. Apple goes down. It's probably going to pull Amazon with it. Now, Amazon was interesting. We had, let's zoom in. Look at the volume surging. We had one test. That was the probe. The second day was just pennies underneath. Then we get an up move. It could not even break the 20-day. So please use this as an educational video, as a lesson on this is what rollovers look like. You no longer have touches. They buy the dips. Look at, they're selling. You're getting up for a potential rebound. They gap it up here. Look at this. They gap it up here, close it here. You got bearish engulfing on top of the 50-day. This is not good. Breach, sideways, sideways, bearish engulfing again, gap, bearish engulfing again. And look at the volume on the selling days. So if you're trading Amazon, this does not mean the Amazon train is dead and over. It's never going to rally again. It just means if you had short-term, let's say, as an educational example, call options, you're getting creamed. And you already had the warning signs over here. In fact, I would say you had the warning signs on the Qs and Apple even before Amazon really started going down. How about Google? Look at this. Remember how I said they often will have those fake outs where they rip it and then you enter that window of time where it magically rolls over? Could you imagine someone looking at this saying, wait, bull flag breakout, that stock should keep going. and then it goes right back down. Did you check the seasonal track record? Did you check what Apple does? Did you check what the S&P does, or the Qs for that matter, since it's Google? And then down we go. We can't get above the red line. In fact, once we got below the orange line on the 10th, 1, 2, 3, 4 back tests. This is a perfect technical, beautiful bear flag. What was once support over here is now resistance, and then down we go. This is about as easy as technical trading can get. And then when you overlay that with the seasonal aspect of the market typically pulling back a bit in September, Apple pulls back. It's not nice to say shooting fish in a barrel, but geez, oh whiz. We highlighted this weeks ago that if there was going to be one, now is the time. Here's Netflix. We talked about this being a big old box. You are now putting back-to-back hammer-like candles right at a key support level. That is usually a bad sign. So if Netflix, I would say if it breaks under 465, that's going to be bad news on a closing basis. Then Netflix is going to break down too. I'm going to leave it there. We already got a 10-minute video. I wish you guys a great week ahead. Please be aware bears have the technical edge with the S&P, Qs, and Apple rolling over. Throw in Amazon, Google, Netflix, other big tech stocks. It's a perfect timing. Then you have the election coming in, which that could be a potential mess. Everything is actually lining up pretty decent. What would it take for the bulls to get the edge? Well, let's go back to the S&P. We'd have to get not only back above the 50, back above the 20, and I'd have to take out these highs. So if I had to put a line in the sand on the S&P, you're basically looking at 345. That's where we need to get to on the spiders before the bulls could come back and say, all right, looks like we're coming back. Right now, bears are on the prowl. Have a great week, gang. I'll see you next time. Wish you all the best.